So hello, everyone, and welcome. We're very excited to have you today. As people are joining slowly, I'm going to introduce myself. My name is Inbal Perlman, the community manager of Google for Startups in Israel and Tel Aviv. And we're really excited to have everyone today for another live session of Google for Startups. So for those of you who don't know Google for Startups, we're a dedicated Google team with experts in various fields, and our mission is to support startup founders and help them grow their business in various ways. And we do that with the help of products, different trainings, a wide partner network, mentoring support, a very big community of founders worldwide. And we do that both before COVID and also today in the virtual world. So one of the formats in which we support founders today is Google for Startups live sessions, where we regularly invite Google experts, partners, and other personalities to discuss with you new ideas and best practices to some of your most pressing challenges. And before starting, we're really excited to share some of the new programs that we have launched recently. So these upcoming programs are actually open to founders from around the world, and you can get more information in the QR. Both Europe Accelerator that's open to European and Israeli startups, an accelerator for women founders, and for Black founders. So you can get all the information in the QR and in the website. And we also have some amazing upcoming sessions in addition to this one. So you can see a session about developing a winning international strategy in times of changing market conditions, unlocking great performance with YouTube for action. What can we learn from 3 startups about navigating the new reality? Preparing your business for international market entry. There's a lot of goodies here, so make sure to sign up for everything. We have more sessions coming up on winning international customers through the power of digital marketing, and the opportunity in a mobile-first world. So we are going to move forward now to today's session. And what we've heard in conversations with many of you was really around angel investments and how to get funding on these times. So what we've decided to do is to get a panel of leading angel investors from around the world, and they're going to talk on the different changes and opportunities in angel investment. And we're really excited because these are people who have a lot of experience in the startup ecosystem world, and list of startups they've invested in and know today. And we are just going to jump straight in and get to know the panelists. So Fabiola, who is joining us from Germany. She is actually on a boat after a vacation. So thank you for joining us from this unique spot. Fabiola, the stage is yours.
Yeah, it's great to be here today. I'm very excited and sort of nice to speak with you. Apologies for the location and outfit, but this is the best I've managed on holiday. And yes, my name is Fabiola. I'm one of 3 founders of AUXXO Beteiligung or AUXXO Investments. We are based in Berlin. We are an active angel club investing in pre-seed phases. And we focus on business models that show sustainable growth, or what we call resilient businesses. And we look for founders who have something we call progressive DNA. So share values such as diversity, new work, etc. Before that, I started angel investments in 2014, and before that, most of my career I was actually in private equity, and I was partner in a mid-cap private equity fund in Hamburg. We had 400 million under management, and before I switched sides to the early stage investments.
Thank you, Fabiola. Gal Chet, who is joining us from Israel, so a different kind of boat situation. Can you please introduce yourself?
Hi, I'm Gal from Spinach Angels. So we've been around since 2014 doing strictly pre-seed deals. Basically Israeli teams. I mean, not necessarily, but that's how it turned out. I mean, we like to be involved and hands-on, so it's easier to when we have closer touch with with the teams, at least in the pre-COVID days. Now we're doing everything digitally anyway. So we invest B2B software companies only. Pre-seed, usually first check in the company. If there's already money raised, it's typically harder for us to get in. And we're pretty opportunistic in terms of the sector. I mean, if it's software, you know, we'll take a look. I mean, we don't do medical, we don't do hardware. But if it's B2B software, we'll take a look. Fintech, cyber, sales automation. I mean, we've done a bunch of fields.
Thank you. Mark from New York Angels.
So hi, I'm Mark Schneider. I am currently chairman of New York Angels. New York Angels is a group of approximately 130 angels. In each of the past 3 years, our members invested approximately $13 million in a whole variety of startups. Deal sizes range from 500 to several million, but at the high end, it's usually in conjunction with others. We lead deals. We have a standard set of documents that we use, that you're also welcome to use them. And I'll have to leave something else for Gregg to tell you about New York Angels, so I'll stop now.
Great, thank you. So Gregg, who's joining us from New York, we would love to hear more about you as well.
Yeah, hi, I'm Gregg Young. I'm also a member of the New York Angels. I did my own startup in 1999, sold it in 2011, and wanted to get involved on the other side instead of raising money, investing money. So I've been with the New York Angels since I think 2011, 2012, and I have no particular sector focus. I guess like a lot of people, my emphasis is on really great founders.
So thank you, Gregg. We're actually gonna move to the agenda for you guys to get to know what we're actually gonna be doing here today. So this is an Ask Me Anything panel. The way it's going to work is the first part of some pre-collected questions that we've collected from founders in our global network. Afterwards, we're going to move into a live Q&A. And we invite you to ask questions as they come up in the section below. And don't be shy. Feel free to write anything that comes up. These are something that we're really looking forward to answer. And hopefully the more questions, the more insights will come in. So we are just gonna jump straight in. If we can have all the panelists on board, and we're gonna shoot some questions, and feel free to write anything that goes along. So we have Gal, Fabiola, Mark, wonderful. And Gregg's video, I see, is a little dark, but hopefully he's gonna show up. Great. So I think we're gonna start with the first question, and that is around your portfolio companies. This is one of the things we've been asked the most lately. These are really turbulent times for many startups. And we wanna know, first of all, how are you preparing your portfolio company for the recovery stage? So Fabiola, we're gonna kick off with your answer.
Yes, well, for us, it's because our strategy so far has been to invest in segments that, as I mentioned earlier, have shown what we saw called sustainable growth. They actually haven't been that affected by COVID, because it's areas like health, education, entertainment. So in a way, what we're doing is the ones that are sales oriented, and in segments, for example, one that is in mobility. We encourage them to spend time on developing and investing in product. So, for example, increasing quality of product before they start off with the sales process again. And we kind of, what we are worried about more is how do we prepare them for, in case, in terms of contingency plans for a second wave. So I think the kind of recovery is still relatively straightforward, but what do we do in a second wave case? We've been trying to work with them, kind of more focus on cash management, runway, etc.
Very interesting. What about Gal? What has been the situation for you guys with your portfolio companies?
Yeah, so I mean, in terms of in most of our companies, I think we haven't yet, or hopefully won't see the impact. I mean, as I mentioned, our companies are B2B SaaS companies. A lot of them are type of productivity tools or I don't know, collection management, stuff like that. So actually, we've even seen a little bit of more demand in recent months. Most of the companies also got funded just before or just getting into the COVID era. So I mean, we're okay in most of our companies, but basically we're consulting them, advising them to not get into any adventures now. Focus on revenue, just generate revenue. Don't invest in anything that is not likely to bring in immediate revenue. Save on costs, unnecessary costs, and just so you have enough runway to sort of survive this, because no one knows really to what extent this will continue or how it will affect. And we're always opportunistic. I mean, if you see it, keep your ears open and eyes open.
Yeah.
Look for yeah.
We'd love to hear also from the US angel point of view. Mark, how have you been preparing your portfolio companies? I know it's not the recovery stage yet, but can you relate to some of the things that have been brought up here?
Sure. So like always, it's very dependent on the state of the company. Those that have had direct revenue hits, such as like I have a couple of travel-related companies, that's all about making sure they survive, especially if their runway was short. They have to make it to the recovery stage.
Yeah.
It doesn't really matter if they're prepared or not, because if you don't make it, it doesn't matter what your plans are. Those companies that weren't dependent on revenue, on the other hand, and have planned raises in 2021 or beyond, in most cases, they should probably proceed as planned. But understanding that any fundraising will probably take longer than they expect. But that's always the case. Fundraising always takes longer than they expect. So that advice isn't any different. How they hear it might be different. The toughest companies are those who are just getting to their ramp up phase this spring when the rug was pulled out from under them. For them, it is survival mode, cut where possible. And particularly in the B2C sector, we've seen that there have been extraordinary delays in the sales cycle. I've got a company that was selling into hospitals, and you would think, oh, that should be good. But the reality is they weren't selling, COVID-related materials into hospitals. So essentially, the whole hospital administration went on shutdown. So sales cycles were delayed. And that's a question of managing that process and cutting back where necessary. But for most of the participants in this event, the value proposition that they should be offering has to be like 10 times what the alternative is. So your object is to get to the marketplace. If you've got a value proposition that's 10 times whatever their alternative is, you'll get there.
Yeah.
So those are my thoughts on that.
So that's interesting, actually, and leads us to the next stage. Gal, what is your take on your investment strategy?
Yeah. Okay. Yeah. So our sort of investment strategy. I mean, when we started in 2014, we've been pessimistic since we started. The slowdown will come because we saw crazy high valuations in our mind, but they just kept on growing. But our whole strategy was to invest in companies that are, sort of business first, which means, maybe a bit less technology. So most of our companies are not, like deep tech, but more business oriented, generating cash basically from day one when we invest. And the idea is to just increase revenues and push revenues. So So we try to invest since the beginning in companies that are sort of a bit more resilient. So now I guess we'll test that theory out. But so we haven't changed our strategy at all. We're still looking for deals. We did 2 deals in the corona. The last few months. We're more, I guess, probably more careful or more. Looking deeper into things, but yeah.
Fabiola, what about your investment strategy? Has your focus shifted?
Yes, we also, as I said, we in that sense we were lucky that we are most active in segments that are not doing too badly or haven't suffered too badly under COVID. There are certain areas which where we would be very careful now. For example, we've spoken to 2 founder teams in the travel segment, and we decided it's so intransparent and unclear what's going to happen. So certain areas, as I said, we're just more careful than beforehand. And maybe if this is interesting for you, we've kind of changed our strategy a little bit as an angel club, or we're trying to get to take in more money. We've already last year we built up a network of female business angels in Germany, and I think in a way we're quite excited about opportunities that can come up in the next couple of months, and want to be able to react quickly. And so every crisis presents opportunities. Already the others mentioned that valuations are kind of adapting, at least in some segments. So we're quite excited about what's going to happen in the next couple of months.
Nice. So actually that brings me up to a question about the valuations. And Mark, I would love to hear your take on this. How are you adjusting the valuations of companies that you're looking at today? And also for startups and founders who are listening, under which circumstances can they expect a similar or higher valuation?
Okay, so first of all, one of the things that's driving valuations for me is just the ability to raise the money. I am really focused these days on the minimum raise necessary to get to a truly measurable inflection point. Nobody wants to be the $499 or shekel or whatever you want to measure it in,
yeah.
in a company that needs 500 to survive.
Yeah.
So I've been spending a lot more time saying, all right, no, 500 is not sufficient. $1 million is necessary to get there and to get the entrepreneur back to running the company. And if anything, that is what's driving the valuations down, is it's just harder to collect the mass. I frankly think it's a wrong question to ask, how to raise how to expect or how to drive a similar valuation or a higher valuation. You got to focus on the money you need. And if it turns out you own 42% of the company instead of 45% of the company, it's meaningless in the end. So I focus on the money you need, take the money, and if that means you have to build a company that's going to be twice as big, and it allows you to build a company that has a much bigger pie, but you can get to work and do it faster, I have to emphasize, you take the money and don't worry about the valuation. You're trying to build a big business, and in the end, if you're off by a few percent, don't worry about it. Build it, get to a value point as quickly as you can, and then when COVID is behind us, hopefully soon, hopefully before the third raise that you're in, then you'll be at a much better point going further. So my focus is to not worry about it, just raise the money.
Does anyone have anything to add on that in regards to valuations?
Yeah, to Mark's point, I think, the first rule we were ever taught was, if somebody's willing to invest or pay, take the money. But there's always sort of, you need to juggle between that and you don't want to raise too much money. I'm not talking COVID times. So there's always, in attractive companies, so investors are pouring money on you. You want to raise 4 million, they want to give you 6. So it's always a decision. You want to have more runway, build more value, or get diluted less. So, but I think definitely in these times, if you find an investor that you like a little bit even, definitely go and don't try to optimize the deal. I completely agree.
So that's actually a great segue to ways for startups to spike your interest, because today we're in a different world where everything is happening virtually. Sometimes the internet works, sometimes it doesn't. Hopefully Gregg will join in, and then that will be our belief that the internet does work. What we have been hearing lately is questions about those new interactions. So what questions, and please feel free to just jump in if you have anything about it. How have you changed the questions that you have in the conversations to founders? Do you want to see different data and KPI? How has that changed, if at all? Maybe it's just the same.
Not so different for us. I mean, I think we're still looking again. We're pre-seed, so it's early stages of the companies. There's not much to really look at. We like to see a product. We don't typically. I mean, we have, but typically we try not to invest pre-launch. Mm-hmm. So we like to see something out there and some interactions with potential clients, maybe a pilot, maybe something like that. But it hasn't really changed much for us, except for being maybe more, more careful and less in a hurry. Let somebody else steal the deal away from us.
Yeah.
Yeah, I think our questions haven't changed that much, because I think the first thing that excites us is seeing founders who we want to work with, basically, and the what I love about Angel is that you have the luxury of kind of choosing founders according to chemistry as well. But I think in terms of questions, we kind of focus more on than beforehand is the ability to make contingency plans, ability to deal with the crisis, to motivate people working remotely. Again, the question focus on cash management, runway. Do they know what they're doing? And I think an example I found interesting, Mark, is one of your examples earlier with the hospitals. And that's something I focus on more also is, do the founders understand what the last couple of months have meant for their customers? And sometimes it's not obvious. Maybe to give an example is I've invested in Selfie. They do online psychotherapy. And the team was very fast in reacting. They set up a new course for depression due to COVID, etc. And we were all very excited because we saw that the customer demand is much stronger, but they're actually selling via health insurances. And it was very interesting to see that we thought this would all go up now, but the health insurances, they're trying to deal with the crisis also, and are saying that they're not able to take any decisions on this. And I found that it's sort of, I hope I brought it across right now, but that it's kind of your first assumption sort of isn't right, and you really need to understand how the decision making of your customers is, and that's something I want to hear clear answers on.
So what has changed for you, if at all, in the questions that you ask founders today, looking at the KPIs? We'd love to hear how has it been like for you?
I think that you can actually overreact to COVID. I mean, it's a horrible situation. And I think what Gal said is exactly right, which is, I think what you have to do is stay alive. But I think that, people who are building businesses and come and pitch, basically, this is a perfect COVID business. COVID will be gone. It might be gone in 3 months, 6 months, a year, but it will be gone, and the world will eventually, come back. I mean, I think things in travel are maybe at risk for longer, but my approach is not to change everything based upon what I think is, a relatively transitory, phenomenon. I mean, I don't think this is as long or as powerful as the fiscal, as 2008 was, which I think was even in a scarier environment. So I just basically, I think, ask the same questions, and I'm much more interested in businesses that I think can survive for 3 years and then take advantage of whatever their initial mission was, without respect to the short-term effect of COVID. I mean, it could turn out to be wrong. I mean, I think Lawrence Summers said this is a hint, that COVID is a hinge that history will swing on. And I think that's just an hysterical overreaction. I mean, I think, there have been pandemics like this, across time, and the world has managed to, come back and, pretty much go on about its business. And so I'm trying not to get overly, hypnotized by COVID.
It's interesting. Are there any do's or don'ts that you think founders will find useful these days? Because we were talking about, on the one hand, don't over talk or focus on COVID, but the reality has changed. What are the major things that you've seen lately? You can start from the do's or the don'ts. Mark, I'm gonna throw this at you, and then guys, feel free to jump in if you have anything to add.
Well, look, the do's and don'ts are, as Gregg sort of changed, they're really no different. They're just emphasized for the short term. I have my own pet peeves of do's and don'ts. But it's not a before COVID or after COVID question. The do's are, make sure you know who the competition is. Don't allow me at a session for the first, I can't tell you how many times I have been after the initial pitch, I have been in what we call our discovery session, which is a 2-hour session. And the entrepreneur says, well, we don't really have any competition. And I'm sitting there on my computer typing Google. And there's a list of, well, what about this guy? What about this? What about this one? Don't let me find your competition. Don't let me define your competition. You need to do that. That's probably my biggest pet peeve on early pitches is the failure to know the marketplace. And it might not be a failure to know the marketplace. It might just be a failure to want to show me that you've got so much competition. We'll find the competition. I want to make sure you can find it. My other pet peeve is just, don't building projections from top down, such as, all we need is 2% of the market and we've got a giant company. Those are my two pet peeves. But the other thing in general is just don't underestimate. As much as I say that, and I talk in the first person, I apologize. It's a bad habit. But as much as we say that, we're thinking, as Gregg said, we're making investments for 5 to 7 years, and if COVID is over in a year or 2 years or 3 years, I'm not expecting to exit for 5 years. So we're patient in that respect, but nevertheless, all of our portfolios on the other side, the safe side, the market side, have been affected, and the risk has been affected. So in general, people, their mindset is cutting back. Although I have to say, so New York Angels just raised the 4th in our series of sidecar funds. And while it wasn't by a lot, we had more investors and more dollars invested in June for that sidecar fund than we had in our previous sidecar funds. So don't panic. Just understand it will take longer.
Very interesting. Does anyone have any do's or don'ts to add in? Assuming nothing changed in COVID, so
I
just
think
your do's and don'ts.
I think the only don't that I think is unique to COVID is don't assume that there's somebody, right behind us with buckets of cash, waiting to put it in. Angels basically survive on knowing that there's the next check, because usually the money we put in is not the money that's going to, get you home. And, so you see models which have are hemorrhaging money, but claiming, huge growth. And I would say that those are less attractive models. Kind of to Gal's point, the one thing that I would say that you care about the short term, the famous, Lord Kane said, in long term we'll all be dead, but in the, the short term you have to even get to there. And so I don't think that any model that says we're going to show great growth and, the financials show us losing $5 million the first year and, $9 million the second year, but look at that, user growth, that is something that would make me nervous now relative to maybe, actually it would have always made me nervous, but it would make me even more nervous now.
Thank you, Gregg. Fabiola, do you have anything to add in?
No, I also think that the do's and don'ts haven't changed that much. I agree with founders should be able to answer the simple questions such as competition or what their business model can actually look like in some time. I think for a personal preference, I don't like when people are too overbearing, and maybe this has changed now. And for me, it's not just COVID. I think here in Germany, with a lot about the repercussions this is going to have, because we haven't actually seen the recession yet. The government is throwing a lot of money at the problem. So we are wondering what's going to be the situation in a couple of months, and all these bazooka programs, they're not endless. And so in a way, look for, I think, humility is the wrong word to install, maybe, but kind of understand that the world can change, and you have to be prepared and be able to have an intelligent discussion about what that means, and talk to your investors. I think for me, it's very important to feel I'm in a sort of partnership, so be open about everything and discuss strategic options. And
Thank you. Gal, is there any major don't that you've experienced lately that you'd like to share with founders of what not to do?
No, I don't think there's anything special to COVID that you don't need to do. I agree with the comments of the panel. I mean, not much has changed. Naturally, you need to address to address the fact that it might be harder to raise money, harder to generate revenue. So you maybe need to give yourself a longer runway, or decrease cost, whatever. But yeah, it's been the same always, I think.
Interesting. So one of the questions that we have been hearing lately is around pivoting, and we're going to pivot to a pivoting question. At a time where startups have to change their business model, I think one of the most interesting topics is what's some of the tips of doing that right. And we'd love to hear about a startup that surprised you in some excellent execution of pivoting, if you have any example in mind. Maybe even in a sector that was hopeless when COVID hit and things have changed. If you guys have any story that you can share with us. Okay.
Maybe an example. It's too early to really say whether it's going to be successful or not. But a company we invested in called the Next 3, and they have online coaching tools for companies and for the companies to teach their employees. And this was about the program they've developed was mostly about changes in mindset, also accompanying other coaching programs, and they and sort of their customers. It's the wrong time to talk to them about investing in that. So, but they developed a program quite quickly for employees to be able to react to all the changes, learn digital work, etc. And they're in the process of pursuing that. Just, we were asking for examples, and but it's too early to say whether this is going to work medium term or what they're going to do medium term.
Yeah. Any other examples in mind from the other panelists?
I mean, we haven't seen any of our companies pivot, at least yet. I don't see anything in the future, but in the near future. But I mean, we are seeing, in like leads that we get, we are seeing companies that were B2C and have now focused to B2B or, to SMBs. Because I think because of the atmosphere, the investment atmosphere, I think it's much tougher to get money for a B2C company these days.
Yeah.
So if there's a B2B angle, I would, at least examine it seriously.
Yeah. So I think, one of the things that we do want to get in the conversation is also the things that are, off the regular record. And if there's any tip that if you were to meet a founder over beer in a bar, assuming the bar is open, so depending on the country you're at, could be a bar near a boat or New York or Tel Aviv. What would you advise them to do that you haven't mentioned so far? Because we do want to get some of the juice that is, things that people might not know that could be helpful.
Does he have a job now, this friend?
There might not be any secret tips, and that's also fine.
Yeah, I think we try to tell founders what the same things we would take with friends. I think what's probably different is feedback with regards to investors. So we talk a little more openly about what we think certain VCs are like or other business angels. But in terms of advice, I think I don't have another secret I wouldn't share with another founder.
That's good. At least you shared it.
I think what Fabiola said before was interesting. I think that possibly this is a time to be a little less arrogant, and to be to understand that the world is in a difficult place, and to be maybe less self-absorbed. I think that obviously founders can it's a very, very tough business founding a company, and I guess it would be nice when people come in to realize that you've got to put things in context. That despite what I said before, in the short term, the world is a pretty scary place and people are going through some difficult things. And I think coming in, with this notion that, I've solved the world's problems and just listen to me and listen to what I have to say. Maybe just, again, humility is a nice trait in times like this. I think that there's been a long period of, 3 or 4 years where founders felt that everyone was throwing money at them and, were coming in, with entitled. And maybe it's not a particularly good time to seem entitled.
Yeah. So we are starting to get some live questions in the Q&A, and we're inviting people to write them as they come in. So a question we just got is, as the fundraising playbook is shifting into a 24 months runway, is a pre-seed investment that usually involves smaller check size still relevant? So anyone can jump in if you have any answer to that question.
Yeah, I believe it is. I mean, I don't think that, our investments model is we invest a fixed amount of $250,000. That's it. I mean, that's what we do at a fixed deal. And we like to see this money lasting for, 10 months, hopefully a year. So I don't think that has changed. I mean, probably the company will be more, put some more restraints on spending cash until they see revenue coming in. But we're assuming that the investment market will still be there and there will still be seed investors after us. So yeah, I don't see. I mean, for us, I don't see a change in that yet, at least.
Yeah.
Well, I would agree with that. I think the way we perceive our role as a pre-seed investor is that we are often we're giving the money before the company has shown traction with first revenues, and so to get the bigger financing round, that's what investors are looking for. So in a way, we're taking the bigger risk. I think on sort of what for me is exciting as an angel is that I try to take try to take the entrepreneurial view. And if you have angels that are able to support you, then it's as a sparring partner, I think it's helpful to have them to take them in. They often I think often it makes sense to take somebody who understands the industry or who is particularly knowledgeable about a problem you have, or a type of business you're trying to build. And what we're also seeing is that for the first VC rounds, whereas beforehand they were quite, it was actually difficult to do follow-on rounds with angels. Kind of now the VCs are looking for the further commitment, because they the argument is that the angels who've been there from the beginning, they actually know the team well and know how they execute and deal with problems. So I still think it makes sense. And yeah.
Thank you. We got another question. Mark and Greg, I'd love to hear your perspective also from the New York Angels group, because you're representing a large group of investors. After you take part in a pitch session and you get to know a founder and you have a positive feel around it, this is the question we got. What do you typically research on the startup? Do you look at the website, social presence, market competition? Where do you go to get more information about the founder or the startup?
You got to pick one person or the other. So, all right. So look, it absolutely depends on the company, and it depends on the market. Very often, companies barely have a web. They have websites up, so that's the first go-to place. The next go-to place is to LinkedIn to find out about the team members, and if it's technology, I might be depending on whether it's my field of technology or somebody else's. I might be going also to Google looking for who might be competitive. Greg, you want to add to that?
Yeah, it also depends upon at what point in the proceedings. I mean, I think one of the things that I've learned over the time is that before actually writing a check, I want to do some significant background on the founding team. I mean, there are frequently, I'm by nature not a suspicious person, but there are frequently things in the past that you find out. I've made mistakes in the past, just assuming things about founders and not checking them out. So, I mean, I think before you close a round, doing a significant background check, and that includes credit checks, things like that, I think is really important. I also think that if somebody's coming in, if there is something in your background that is troublesome, it's not great to not refer to it and have somebody find it. I mean, you can manage it, you can message it, but if there is something, if there's a bankruptcy or if there's a failure, it's really terrible to have somebody just discover it on their own rather than having you explain it and surface it and explain it. And so I go back to what I've learned in 7 or 8 years is that the 3 most important things in a startup is the founder, and the founder, in that order. Yeah. And so, before writing a check, now I really want to know what the background is. Not, LinkedIn is a starting point, but everybody knows LinkedIn is whatever you want it to say. And so, doing a check on even people who are in the same industry who might know you, down to things like credit checks and stuff like that, like you would do for an employee. a high price employee, since, this is a high price employee, if you think about it.
Yeah. Interesting. Does anyone have anything to add on that? Okay.
Actually, let me add something.
Absolutely, yeah.
Because the hiring of a CEO approach is high on my mind, and so I really want to see in as much detail as I can what they did as managers in their previous positions. That doesn't, certainly when we see somebody that says, well, I was involved in three exits, I was a founder and involved in 3 exits, and I'm wondering, so why are you coming to me for money? That's always a question, and sometimes
Right.
it's a good story, but tell us why. I mean, it's okay to say, well, I was a founder, but we had these ups and downs, and there was a roller coaster financing, and eventually the investors got their money, but I still need your money because I didn't make $10 million from this deal or whatever. But in the absence of that sort of history, one of my standard questions is, so tell me, how many people have you hired and fired since you got out of school? And tell me about those. And I really want to understand what their thoughts are in terms of how they build their team around them.
Yeah. So it's interesting. We actually just got a question that is around, we have a company who just finished a pre-acceleration program at Google for Startup, and they said, we did think about reaching business angels for financing, and now we're wondering how to reach them and how to do that correctly when looking for smart money. So does anyone have anything to share in that regards? An actual reaching you guys.
I think that if you're going to go to an angel group, I think that you pretty much have to come sponsored. I mean, New York Angels gets like 150 submissions a month, but I would say that the ones that come in with a member kind of sponsoring or babysitting, there's a lot of clamor. There's both a lot of money out there and a lot of people investing, and there's a lot of people looking for money, but it's very hard to pick any of them out of a pile. So, I guess this is kind of falls under the category of no duh, but it would be much better to come in sponsored by, somebody who knows the group. In our group, I think having a member shepherd you through the process is a much, much better chance of success than just lobbing an application on the website. I mean, some of the applications we get on the website are just, completely inappropriate. I say half of them are, basically tinfoil hat kind of applications.
Yeah.
And so, coming in with a sponsorship, I think people will tell you the same thing about going to a VC. It's very hard to, get traction with a VC just, applying blind. So if you can find somebody to, walk you in, that's I think the most important thing you can do in dealing with an angel group.
Yeah.
That being said, we do spend a lot of effort to go through what was submitted. So if you don't have an entree, certainly when, as Greg said, we have 130 applicants a month. And certainly if it says referred by, that gets just a little bit of attention because somebody knows how to, somebody knows something about the company. But that doesn't mean you shouldn't apply if you can't do that, because we do have people that literally go through these applications and bubble them up. And different, many industries have that. The publishing industry refers to it as slush. They pay interns to sort of read and read and read, just in case they find anything. So Greg's point is certainly it absolutely increases your odds.
Yeah.
But don't fail to apply simply because you haven't had a
That's a really good point.
Yeah.
Because we do look through all of those, but make sure your application answers the questions. It's amazing how many applications are rejected because they simply fail to answer the questions.
Yeah. So I have a question for Fabiola. We just got another one coming in. And if anyone has more questions who is watching, feel free to keep posting them. When making a seed investment, what do you expect the investment to achieve? Traction, product market fit validation, product, team. What is the balance that you're looking for? This is a big question, but it's something that we can hopefully get a glimpse into.
What I think it depends very much on what the team approach us with different things they want the money for. So some want time to build up team, others want to see if the product attracts customers, others want to show traction. So it's quite. I think what we want to see, we want the team to convince us that they can achieve the milestones they want to achieve with the money. We don't have rules with regards to what they should show. So, for example, we invested in one team. They had first sales. They wanted to build up the team, and that's what they did. Another founder where we invested very early, she does sustainable nail polish, and we actually financed the first production batch to reach her customers. So, and they've kind of all achieved their goals, but different ones depending on the company.
Yeah. Gal, what about you? What are you looking for? Again, big question, but
I think it's a balance of everything. I mean, I agree with what Fabiola said. I mean, typically we want to see increased traction and validation of the product market fit, of course. We try to sort of envision what the next investor will be looking for. So naturally, reaching some nice MRR is great, but sometimes the validation of the market fit is more important, even if you can't show traction in terms of revenues, but you can onboard a few customers, show usage, show increased usage and willingness to pay, even if it's not the optimal amount. And yeah, I mean, as you go along, you need to build the team to make the company stronger in terms of the team. So, at times it will even be a milestone for us. So sometimes if we see a team we like, but it's not complete or we don't think it's complete, so we will do a deal where we give them a certain amount to start running and complete the investment once they bring the missing, sort of member of the team.
So that actually leads us to another question that we just got in the chat, which is, from a founder point of view, someone wrote, what would you say an angel's added value is over a VC or a micro VC? So this is somebody who's trying to understand why he should reach out to angel investors. If anybody has something to say in that regards.
I think that I have strong.
Everybody wants to answer that.
Everybody wants to answer, yeah.
It's a softball.
I think that one of the greatest things I can say about the New York Angels and about angel investors is that everybody there is like rooting for you. I think that what happens with a VC, I think you're just part of you're part of an actuarial pool. And I think angel investors, invest in startups like people invest in Broadway shows or in restaurants. They want to be part of something. They want to be right more than they want to get rich. Or maybe not more than, but at least they want to be right and they want to be part of something exciting and positive. And so I think that angel investors, while may or may not be as financially deep as VCs, they absolutely are on your side. I think that the New York Angels, which is, most of my experience with angel investing, is just an incredibly positive, force, and everything about the group wants to make you successful. Nobody's there trying to, make a big show for their limited partners. It's all personal money, and it's all, everybody's rooting for you.
Yeah.
In addition to that, I think I need to add, so we're 130 people. Most of us have been entrepreneurs. People ask me, do I invest in something I know about or not know about or across the board? And my response is, if I don't know about it, somebody in my group has to know something about that business and know a lot of that business. So you're drawing on a pool of people who have all been there. Not all there. We do have a few people that have only been bankers. We have a few people that, prior to investing have been, lawyers and whatnot. But for the most part, many, the vast bulk of us have had to worry about payroll, have had to worry about fundraising, have had to worry about getting advice from 3 people, all of whom you trust, but are giving you mutually exclusive advice, and you can only listen to one of them. And the angel group has a broad, in our case, 130, in other cases less, sometimes more, well of experience that you can draw on. You have to tap it. If you don't ask, you might not get that information, but it's there for you to tap.
That's a great point. We have another minute left. So
Could I just
Fabiola,
add one thing that also, at least in Germany, we invest pre-seed, and often, sometimes we're surprised that founders haven't really understood what the VC track actually means. So I think there's, if you sort of pre-seed, often it's not that clear yet where you're going. And that's where it's the additional role of the angel, because then VC is one option, but there are other financing options also. So it depends the phase you're in and what business model you're building. Sorry, Inval.
no, it's a great and valid point. We are actually at time, and we would like to thank you so much, Gal, Mark, Fabiola, and Gregg. This has been very, very interesting, and you've shared with us a lot of different insights, and I think having the global perspective has been amazing. So thank you. And if anyone would like to reach you guys, New York Angels has a website. I'm sure you all have websites. So if anybody's watching, is there any other way to reach you? No.
Website,
Okay.
LinkedIn.
Great.
That's the best way.
Amazing. Yeah. So thank you so much. And everyone who dialed in this afternoon, we hope to see you in future sessions. You can check out the website of Ads on Air. We have all the different sessions coming up. We have about 6 more, and we wish you a wonderful end of the day or beginning of the day, depending on where you are in the world. And this recording will be available, so you can come back and rewatch it in the website. And best of luck to everyone. There's this is a wrap. There's a QR code if you'd like to see. I think it's on the left with all the different sessions that are coming up. So feel free to check those out and stay healthy. Most important. Thank you.